Here we are, episode two. All right, let's dive into wine first. We're going to talk about our weekends, little market update, and then we're going to launch into step one of the buyer process.
Beautiful.
So I have a Cabernet Franc, which is my absolute favorite. I love the spicy, the pepperiness. I love that. This is Mazzacano Cellars from WiT. WiT, all capitalized, WiT Cellars. We went there. It's just real good. So I've already opened this, so no dramatic cutting of the cork. So yeah, what did you do this
Saturday, I did a favorite things party. I went to girls' friends. I taught Sadie in the morning.
Yeah.
And then went to a favorite, went to a favorite things party, which was really fun.
Right.
And then Sunday, we went to the driving range with my parents and husband and daughter. 2-year-old loves being out there. It was freezing, but her and my dad stayed inside for a lot of it and hung out, and then just had a lazy, quiet afternoon and watched the movies. Especially watching movies, so
Yes.
great win. Yeah. How about you?
Cheers. Let's try this.
She's good. It's good. Yeah, it's not too. It has a sweetness to it, so I don't.
It does. It's a little bit sweeter than I would prefer for a cuts.
Yeah, I like that.
You do.
Okay. I don't like the spicy peppery.
Really, I love the peppery and the dryness. That's my favorite. This feels way more fruit forward to me. And like the pepperiness is in the back end.
I would agree with that. This is my type of cat from.
Okay. Well, it's not mine, but I'm still enjoying. What did I do this weekend? Well, I'll kind of like reverse engineer my weekend.
Yeah.
Because then we can like launch into work related things. But we had our best friends for dinner and game night. Our kids are like 5 months apart, boy and girl.
Girls like same ages.
Literally same ages, just 5 months apart. She was pregnant, she had her kids. I was pregnant. So
My dog best friend that same thing, 9 months apart, and it works out great.
It's phenomenal.
Yeah.
So that was really fun. And then yesterday, Bestie and her daughter came over. Our sons hung out with husband. And then my 9-year-old got her ears pierced.
Oh, Chrissy!
Yeah, she was so brave. She did so good. I mean, the piercer was like, she was a champ.
Yeah.
Like, she barely flinched.
Yeah.
Yeah. And they're like, so cute. She was born in June. I think her name with this. It's like rainbow-y kind of vagina. And then, I got 4 piercings myself. So
I'm just going to say, when I got my ears pierced, I remember my mom had to call in her sister just help support her. I was, okay, that doesn't sound like a jerk. As you were fine. You were like,
no, literally, there's a picture of my daughter holding my hands while I'm getting pierced.
So that's always worse for the parents.
Yeah. So I got my nose done against, and then I got, it's called the Coach.
Oh, yep.
Yeah, I love it here. Yeah, it hurts real bad. And then I got my second earlobes. So anyway, really don't recommend pork at the same time for sleep purposes.
Yeah.
But
so you on fire,
it was pretty. So
yeah. It is very nice.
Exactly. Yeah. So anyway, that was my weekend. But then kind of reversing back, I wrote 2 offers last week. Showed a lot of homes, a couple pre-inspections. So pre-inspection is where you are hiring an inspector to go out and do an inspection verbally without the big report.
Okay.
So
do they not give any sort of report?
Nope.
I don't think
they verbally tell you what's wrong with the house, but they don't, like, it's a cost savings to the buyer, because if it's a competitive market and you're going and you're offering on multiple homes, potentially, there's low inventory, you don't want to pay $500-$600 every single time to get a report. So it's like a $200 savings for you to just have a verbal inspection.
Yeah.
So anyway, so I had a couple of those, and then 2 very competitive offer scenarios. Like, I don't know what happened last week, but all of a sudden it is competitive again. I don't know if this is going to stay. Only time will tell. But first scenario, 9 offers, And my folks, I mean, it just sucks because my buyers put their heart and their soul into their offers. They're not just offering because they're like, oh, let's see what happens. It's like they want the house.
Yep.
Right. So anyway, um, 9 offers, cash you to sell. And then second offer, I wrote 4 offers on the table and another cash offer you to sell. So that stinks.
We'll kind of get more into this probably. Yeah, this would be this episode of kind of pre-approval process and ways to increase your pre-approval standing or whatnot. Don't really love those words, but are you seeing that? Like, do you think this one, were your buyers TBD approved? Do you think a TBD approval would have had any impact on the cash or these?
No.
Sometimes I see that they do, but cash is cash. Like
cash is cash. But I think that the issue is that my buyers don't want to wait financing right now because, well, yeah, I don't want to wait financing and then the appraisal comes back low. The appraiser's having a bad day.
Yeah.
And then the appraisal comes back lower and then you have to come up with a difference between just price. So in both of my offers, my clients put what's called an appraisal shortfall. So here's the amount that I'm willing to pre-negotiate with you, seller, and say, if the appraisal comes back low, I will pay up to X amount on top of that. It's like pre-negotiated, done, seller. There are potentially a couple of scenarios where they could back out, but they probably would not be wise to do that because they have to go back to the market, explain why you went back on the market. So that's for another episode. But
both of my, I think an appraisal episode is like,
key.
An episode in itself.
And it's key to have that conversation because I had 2 low appraisal scenarios last year, won them both.
Yeah.
So that was great.
Yeah.
But it was like, oh, this is new.
Yeah. I think I was the one with
for you. Yeah. With you, it's my first.
Yeah.
And then I had another one in November.
Yeah. And the shifting of markets, we're kind of going a little bit off topic, but the shifting of markets when competition increases, the first part of it is when we see them a lot. Because I always say there's an emotional value and a calculation value. And appraisers have to go on the calculation value.
Yeah, they're not emotional.
Exactly. So it's like
they're looking at
that, when we start seeing this competitive market start to increase is where you really have to protect. Yep. Or be ready to come in with the difference of the appraisal. So, I think we do that was included in a full episode with other things, but I think we need to really break that one out in itself.
There's so many pieces to it, but basically what I'm trying to do as my client's broker is like worst case scenario, what would happen? And one of the ways that I can protect them is by pre-negotiating in an appraisal shortfall. Hey, this is the max that I'm willing to go.
And that just helps if that scenario.
Yeah. And it does like that, having that appraisal shortfall helps immensely if there were no cash offers.
Yeah.
Even I think listing agents, the one that I talked to last week, she was like, well, I don't like wage financing. I just don't like it because you're not proving to me that you have cash to cover a shortfall. So just embrace the shortfall.
If the appraisal contingency is still in there, that will counteract the financing. So it's like, as a lender, I like that an agent doesn't like the financing contingency.
Yeah. I don't
regardless of how confident I am in the buyer's pre-approval, I'm still never going to tell an agent, yes, I love the idea of financing.
Yeah. But no, it's like you're having a deep conversation.
Yeah. You're branding your person. You really have to understand the pros and cons. And sometimes there is a pro. So, let's dive into they typically call the real estate agent first. That's the fun part, right? No one wants to give all of their financial information and talk about the large amount of debt that they go into. So they typically call the real estate agent first. So someone gives you a call, how do you start the process?
Yeah. So oftentimes buyers are being introduced to me by one of my past clients or like a referral partner, like that's like in a part of the country. Typically that's like an email or a text, more often an email. And what I do is I'll just reply and say, thank you so much for introducing me. Buyer, let's schedule a time to do a Zoom. In the next like week or two, I'll list out, hey, here's my availability. I'm happy to do nights. I get it. Like, got kids. Night works better after the kids go to sleep. I have kids myself. I get it. So I try to be really flexible with that. And it's basically an hour long chat of me getting to know you, you getting to know me. And even before that call, I have my client or my potential client, the buyer, fill out a Google form questionnaire. So I think it's like, I want to say it's like 12 questions, but it's basically just giving me good information as to like how ready you are to write an offer on a house. Like if on a scale of 1 to 10, you're a 10, oh my gosh, I found a good house. Obviously, we need to push up that call closer.
Yeah.
Closer. Yeah, they're sooner rather than later. So,
But if they're,
yeah, if they're like a 5, they're like, I'm getting started. Like, yeah, if the right house came along, like, okay, now I know that time is as that scenario. Also, like, I try to get permission from them to connect them with one of my preferred lenders. Um, Kind of try to get to know, are they signed with another agent? If we'll talk about that, but that's a new thing this year is if you have an exclusive agreement with another agent, I really am not supposed to be talking to you. And I won't talk to you because I'm not going to breach your contract with that other agent. So, um, gives me really good feedback. So I review that. And then what we do is we will, in that hour consult, just get to know each other. You can ask me questions. Often the buyer is leading the conversation of what questions they have, what they're worried about. That's one thing that I have in the questionnaire is like, what are you worried about in this process? And then also the last question I have is name 3 things that you want to talk about in our call. Because I want it to be very focused and like an hour of like what you want out of the conversation.
Yep.
So we do that. And then during that call, we do review the BBSA, Buyer Brokerage Services Agreement. And it is a new, used to have the law of real estate agents pamphlet. Well, now it's real estate brokerage in Washington State. So this is what that looks like right here. It is 4 pages. It really boils down our duties as agents to our clients and also to our buyers and our sellers in layman's terms. The previous pamphlet was just very wordy and had a lot going on with it.
Yeah.
And then we also go over the buyer brokerage services agreement. So basically, what that is January 1st of this year, the Department of Licensing really in Washington State really wants us as buyer brokers to have a contract signed with our buyers. We have never had this before. I mean, sure, there was like a buyer agency agreement. I would say most brokers didn't have those signed. I never did because I felt like, well, I don't want to lock someone into working with me if they don't feel comfortable with me. Like, I don't feel good about that. Like, I want there to be a good rapport with my client. And so I just never felt like the need to do that. But with the National Association of Realtors lawsuits, Department of Justice, like all this stuff regarding compensation, the main thing the DOL is trying to get after is making it very clear to buyers how we as brokers are compensated and just increasing transparency. And I think it's been a really, really good thing. I was just talking to a couple of brokers here in my office. And I'm like, I love this agreement. I love it.
I think that how we both get paid is people are always asking.
Yeah. It's never really been like a conversation that
Exactly.
have.
Exactly. Yeah. Unless you're the seller, you don't see like I don't get paid from a check. You don't get paid from a check from the client. The seller just has proceeds taken out. Mine's built into the back end of loans, stuff like that. So I think it's good to have that.
Yeah, I think the increase in transparency is great for our industry. And with sellers, I had to have a listing agreement signed.
Yeah.
To ratify how I was compensated, my duties to the client, and vice versa. So why wouldn't we have one on the buyer side?
Yeah.
So I'm loving this, honestly. And there's 2 kind of pieces to the buyer brokerage services agreement. I'm going to refer to it as BBSA now on because that's just helpful. So there's 2 types of agreements that you can have, a non-exclusive and an exclusive. So non-exclusive is, think of it as you're dating. the broker. You're not quite solidified on whether or not they're your person, right? But maybe you want to test the waters and see if they're the right person for you. The non-exclusive agreement is the minimum contract that you need to have in place to receive brokerage services.
Okay.
So if you want to go see a house, you have to have a non-exclusive signed at least. So that literally, that only the person that writes an offer and gets you to closing is going to be compensated in a non-exclusive, and also an exclusive as well. The exclusive is, I am hiring you, Mariesa.holm, as I should point to myself.
Yeah.
I am hiring you, Mariesa.holm, to be my real estate broker. I am only going to have you write offers and show me properties, that sort of thing. So that is something that we review in the Zoom. I know that's a lot. Hopefully I dumped it down.
Yeah. It's something that like they can start out with a non-exclusive.
Yeah, you can.
And then they're like, hey, no, I like you. Exclusive. Then switch it to exclusive. If they start with an exclusive, they can get out of it, right?
Not necessarily. If your term ends in an exclusive agreement, yes, but there is what's called a tail provision for 60 days.
Okay.
Where if you go write an offer with another broker within that 60-day period, technically I could potentially go after compensation. So am I going to do that? Probably not. I really don't want to be involved in law cases like that sort of thing. But that I mean, it is a legal document. You should consult with.
So if someone came to you and said, hey, Mariesa, my friend used you. I liked you. I have this exclusive agreement with this other agent.
Mm-hmm.
I want to cancel it. What would be the conversation at that point?
It's a great question. Okay. So I cannot.
This is all new stuff, so that's fair.
Yeah. Oh yeah, that's a great question. And I think people will be asking questions. I cannot give you advice.
That's right.
Okay. So if you want to cancel your agreement with that broker, you need to have a conversation with them. That's all I'm going to say.
Or I just let me.
Can you terminate the agreement? Yes, you can.
And you would just have to wait 60 days.
Potentially, depending on their tail provision.
Okay. Depending on what's rated.
It's an exclusive agreement. Yes.
Okay.
Yes. So technically, like, again, these are all legal documents.
Yeah.
You should consult an attorney.
Yes.
Do people do that? No. But I just want to throw that just to
yes, okay. There's certain disclaimers that like I really have to be careful on certain things. That's why I will never say like direct rates or anything like that, because that's a whole slew of trouble I could get in.
Yeah, I don't want to get in trouble either.
Exactly. So yeah, okay.
This is a legal document. This isn't. It doesn't like. This isn't a piece of paper that's like. No, this
so real. If someone wants to get out of their exclusive agreement,
have a conversation with that person,
with the broker, potentially with a lawyer, maybe not with a lawyer, maybe just with the broker, depending on how they react.
I mean, if you're telling your agent, hey, I don't feel like this is good for me, and they're not letting you out of the contract, that's their, which I think it go further into that. I think that's a whole timing on that.
I think it's something also, just as for listeners, like this is something that is new. There's going to be a lot of questions, and there's going to be questions from the clients, from the agents, from the lenders. There's just going to be a ton of questions, and some we're all going to know. Some are going to be new, as with anything new.
Yep.
There's going to be questions that have to be found. So,
So going back to, can you amend the agreement? Yes, you can. Yeah. So here's where I'm kind of going with my buyers. At the end of that call, we can go one of two ways. One is you're like, yep, you're my person. I'm going to sign an exclusive agreement with you, Mariesa. Like, you are going to represent. I think that's probably for the client who, they're best friends with one of my past clients. I'm like, oh my gosh, why would I go anywhere else? Right? There's going to be other buyers that, maybe they just feel like they need to do their due diligence and make sure that broker is the right person for them. And I don't blame them, because this is not monopoly. This is your real life.
Yeah.
You are paying a lot. This is probably the biggest purchase you might ever make in your life. And I get it. You need to make sure that you trust that person that's offer for you. So Anyway, we can go the non-exclusive route where basically what I'm calling it is my trial by tour. So we're going to get you pre-approved first, which you're going to dive into that in a sec. But we're going to get you pre-approved with a lender of your choosing. And then I have recommendations, though. She's a great one. You're going to get pre-approved. And then we're going to schedule a date where I pick 3 properties based off of your filling out my fire workbook. Okay. And we're going to have this as part of the show notes for you to download. But basically, this is like your wants, needs, deal breakers, that sort of thing, areas, the desired amenities that you want in a home, that sort of thing. So, based on your workbook that you fill out for me, I'm going to pick 3 homes. Some I might be pushing the edges. Like if you say, oh, I'm okay with the fixer upper, I'm going to make sure you're okay with the fixer upper because the definition of a fixer upper to one person is completely just wildly different than another person. So, and then I want you to pick 2 properties that you're interested in. And what we're going to do is we're going to spend about 3 hours together actually touring homes together so that you can get a feel for my advice during tours. You can ask me all the questions you want in person. Obviously, you get to like meet me in person, you get to know my personality. And then after that point, if you're like, okay, Grace is it, then we amend that non-exclusive agreement into an exclusive. And then from that point, I will then solely be dedicated to your success. If you're like, hey, thank you so much, you're not for me, great, we'll part ways and I will go and serve my other clients that I'm serving.
Yeah.
So those are kind of the 2 different routes. Backing up a little bit though, you need to get there.
Yeah. Or you even go out there.
Before you go out and tour homes, I'm not going to go show you homes until you are approved. So Denae, take it over on the
Yeah. So kind of like when people reach out to you, you get an email. Mine are typically emails introduction from the agent. That's how you do it. Or sometimes they'll give you a call, text, or something like that.
Sure.
And I usually start out with a quick 5 to 10 minute phone call to get an idea of their goals, their situation, and what they're looking for, all of that. You know, I kind of ask like, what's your max purchase price or what's your target purchase price?
Yeah.
What's your total cash to close number? Like dollar amount up there that they have. What's their max comfort and monthly payment? Like they find the perfect home. What is the absolute max? And not to a way to push them there, but just to show them their options. Kind of get an idea of how they would describe their income and employment, get an idea from where their cash to close is coming from, just a quick overview of it.
Yeah.
And then at that time, I send them a follow-up email with a link to my application as well as a handful of documents needed. 30-day pay stubs, W-2s, tax returns if they're self-employed, and bank statements. And then they fill out the application, and then I review everything. That's where I pull credit.
Talk to us about credit a little bit because people I find get really worried about hard pulls.
Yeah.
So tell us a little bit how that works.
So hard pulls aren't as scary as they.
No, they're not.
This was before I was in, like, before the crash, before all the reforms happened.
Yeah.
My understanding of what it was and why people are so scared of it is like one pull water your credit, like it not to down 20 points. The bureaus want people to allow for shopping, whether it's credit cards, car loans, mortgages, whatever. They want to allow for it, so they want to allow for people to get their credit pulls. So yeah, maybe like a couple points from a credit pull, but really where you'll see an impact is if you are shopping for a car, if you are applying for credit cards, like if you do a ton of credit shopping.
Are you talking about like multiple different types of credit?
Yes. Or when you're like going to get a car loan.
Sure.
I saw one person they didn't have great credit, so it was going to be harder for them to get a car loan, but there was like 30 credit pulls. Oof. So my advice to people who are shopping for a car loan, make sure you talk to them at the car dealership and say like, don't shop on my credit. I want this specific one, or like, please only start with one. And if like the terms, if they think terms can be better on a different one, then you can go from there. But like, don't shotgun
Gotcha.
the credit for the car loan. That being said, if you are applying for a hard pull, something that needs a hard pull, if you do it within a few days at the multiple lenders, it counts as
okay. Did you hear that? Repeat that again.
so. If you're shopping mortgage lenders, have everyone do a hard pull within a couple days, and all other of each other. Yep.
Okay.
Because that will allow for, you'll still have like multiple line items for each other people that did, but the bureaus look at it as one.
Okay. So, and here's what I'm going to say: it is way better for you as the buyer client to finalize your lender before we go out and shop homes.
Yes. Don't do it when you're under contract.
And we'll talk about this probably 3 episodes from now. There is so much coming at you after you get in contract with a seller that those first 3-4 days that you are literally going to thank me that you did not have to shop 3-4 different lenders at that time.
Yeah.
Because you're having to like replicate each loan application, each documents, all the things, and having to submit that multiple times. And then you also have to do your earnest money. There's just so many things happening that first day. Just do it before, and just do it.
And the lender can oftentimes have an impact on your offer.
Oh yeah.
So I know I talk to listing agents, and there's some that will tell me like, I accepted their offer because you were responsive, because, all that type of stuff. So it's also, keeping that faith in the offer that you put.
Totally. And just word of advice, just try to stay away from the big banks, okay? And if you are insistent on using one of the bigger national banks, I advise you to test that relationship, okay? Call them at 8:30 at night. Call them on a Saturday. Call them on a Sunday. Do they pick up their phones? Because often we are writing offers at night and on the weekends. Yeah. And if I can't get a hold of your lender, because we need to have them run numbers or we need an updated pre-approval letter and I can't get that for you, that can be to your detriment.
Yeah, you can lose that one.
And that would suck.
Yeah.
So,
yeah. So local lenders are preferred by agents.
Exactly.
And, I can do most of my job off my cell phone. So I am always available.
Yeah.
But back to credit, I can actually do soft pull credit on conventional loans, on most conventional loans. I'm not going to go on.
Just like touch.
I'm not conventional loan. Yeah. So a conventional loan is the, I don't want to say standard. It's a loan that most people know about.
Yeah.
It has private mortgage insurance. It's more privatized in a sense. It is backed by Fannie and Freddie, Fannie Mae and Freddie Mac, who are government entities. But that's more of like the security of the loan, and the security of the bank. Like if the bank goes under, your loan's not going to get lost. Like
maybe look at it as like it's kind of one of the more standard loans.
Yes, more. Yeah, yes. That's what when people think about it, they think about a conventional loan. And so for Fannie Mae, Freddie Mac doesn't allow for the softball, but Fannie Mae, which I do most of my loans through Fannie Mae. Okay. I like their guidelines the best. Guidelines are very similar, but slightly different. Sure. So there's certain times we have to go Freddie, and in that case, utilize softball. But I always start with softball, and I can do a full pre-approval.
Okay.
The government-backed loans of VA, USDA, and FHA, I can't. But for your conventional loan, I can do a soft pull. So it's, there's not a hard pull until you get under contract.
Okay. And then let's bust the down payment myth. How much?
Don't need 20%.
Don't need
20%.
Okay.
It really depends on the loan partner. So conventional is anywhere from 3 to 5% down, depending on,
that's the low.
That's the lowest.
Yeah.
Depending on first-time home buyer and a few other different requirements is 3 to 5% down.
And then FHA,
FHA is 3.5% down.
sometimes you can get it down small.
Yes, same with conventional, but that is a separate loan.
Okay.
So the first loan still requires 3.5% down.
Right.
But there's a silent second that you can get for both conventional and FHA.
And I have helped multiple clients with the zero down payment assistance program get into homes as first time home buyers, and it is incredible. Often they had no cash out of pocket to get home. And then, other times I was able to get a seller pay credit to help offset.
I think there are certain situations that those down payment assistance are phenomenal.
Yeah, it's not for everyone.
If you have a down payment, though, it's going to incredibly change your interest rate.
Right.
So that's where, like, I always tell people, like, don't use this just because you can't. You still have to pay that back. Yeah. But there are situations that it allows people to have home ownership. So yeah, there's ways to have the out of pocket be nothing or minimal, but the conventional is 3 to 5, FHA is 3.5% down. USDA has a very strict income as well as location limit, but that is a zero down program as well. And I really like that as a zero down if you can qualify.
Done one of those. So pretty uncommon, I would say.
Yeah.
In our area.
But it is because the income limit's low. They're a hard loan to qualify for based off the restrictions, but it's a risky loan. It's zero down. And they call it a guarantee fee, which is essentially the mortgage insurance, is very affordable on that one. And then there's VA, which is also a 0% down. Obviously, you have to be a vet, have served, but that's a phenomenal program.
Yeah,
for vets as well.
Yeah, it really is.
Yeah. For kind of the overall timeline, once I have that initial intake call, application fills out, a pre-approval can be anywhere from a few hours to maybe a week. And it really just depends on how responsive the client is, how complicated the income is. If you're a W-2 salaried employee, no credit issues, all of that, we're done within a couple hours.
Yeah.
If you're self-employed, have a couple different business, have this, that, it may be a few days to kind of piece together everything, get full, because that requires more documentation, get more in depth of all of that. But once we finish the pre-approval, I know I'll put together numbers that fit within the guidelines that the client kind of gives to me, because a lot of the times what their max comfort isn't what their max potential is. So kind of put those together. And then at that point is when I typically like to meet up, whether it's Zoom or in person, to then go through details of the different numbers, what are included in your total cash to close, and how different this different structuring of the mortgage can affect your payment, affect your cash to close. I always say a mortgage is not one size fits all. It's not, okay, you have this mortgage insurance. There's so many different ways to input mortgage insurance, and some, just different people's goals are different. Sometimes cash to close is flexible, but monthly payment's really tight. So there's ways to kind of, or vice versa. So I'll go through that, make sure we're on the same page of those initial scenarios, because I don't want to give them 20, I want to give them 3 or 4, and have them say, like that one, this is a little bit off, that's a little bit off, and then we come back with more to kind of narrow it down. And then at that point, I'm ready to issue a pre-approval letter.
Do you get a pre-approval letter if you feel like you can't close the loan?
No.
Okay. No. Great.
No, I am very cautious of that, because it puts my name. Not only does it put the client in a bad situation, it puts my name on the line. So I don't want to have, a client go out, get under contract, and then it's something that it's like, oh, I can't close this. I have never had a loan not closed because of time. And you know, if that same agent gets my pre-approval letter later, they're going to say, well, I don't know if it's valid or not. So that's why it's very important,
Right.
that, you know, not only for the clients, but also for my rep.
I think as a client, I think it's really important to ask your lender that question.
Have you ever had a loan not closed?
Yeah.
Yeah. Whether they're honest or not.
I mean, I don't know if there's a way to do that.
Yeah.
I mean, I think, you know, if they're stuttering, like, well,
Yeah.
you know what I mean? Like, what you just said is so true. Like, you are putting on that pre-approval letter.
Yeah.
And if you can't close it, that's on you.
Yeah.
Well, I mean, it's the client. But, you know, you were vetting that.
Yeah.
Yeah.
I think exactly. There's certain things that, like, if the client doesn't tell me, I can't see until whatnot. But so it's had, and what I always tell clients as well is, I'm on the client side. I'm not on the bank side. I'm the middleman between the bank and the client. Yes, I have to protect my lender to make sure that, like, good loans go through and protect, and that's really protecting all homeowners, because that's what happened in the crash, is bad loans were issued. But I want to know, because most things will get dug out at some point. And if you're not upfront about it to begin with, they're going to get dug up later. And that's the issues.
So be
honest. Be honest. Be upfront. Some things I'll say, nope, that's not an issue. Don't need to worry about. Other things, it's like, okay, that could come up. So how do we get in front of it? Sure. So be honest. Anything that you think could be an issue, let's talk. Yeah. And then after, so I typically don't give the client a pre-approval letter, right? I'll say, hey, you're all good to go. Go connect with your AJ, go connect with Mariesa to start your, you know, here's the fun part, go shop.
Yeah.
And then that's where, as you're writing offers, the agent will reach out to me, say, hey, we're offering 527.
Sure.
And I'll update a pre-approval letter with an updated date, with an updated purchase price amount. So it's very specific to that.
Yeah. Love it.
Yeah.
So step one really is hire your agent, hire your lender.
Yeah.
That's really what step one is. Next episode, we are going to be talking about what happens when you're exclusively working with me, Mariesa. So we're going to review things like what happens when we're touring homes. We'll talk about my app that I use with clients. We'll talk about lender involvement in that process, and then also talk about CMAs and also reviewing seller documents before offering our property. So that's what's next.
Yeah.
Cheers to episode 2.
Yes.